How global markets performed this week. US stocks edged up on Friday, recovering from Monday's sharp decline. Despite the rebound, the indices ended the week slightly lower. In Europe, stocks closed high as markets began to recover from earlier losses. The pan-European stock 600 increased by 0.57%. Technology stocks fell while healthcare rose. Asia-Pacific markets also saw gains buoyed by Wall Street's rally. Australia's ASX 200 index rose 1.25%. Japan's Nikkei 225 was also up, along with South Korea's Kospi. However, mainland China's CSI 300, that slipped. Oil prices advanced over the week amid easing recession fears and Middle East tensions. US crude settled above $76 a barrel and Brent crude closed just below $80 a barrel. Now, gold prices steadied after a recent rise, with spot gold down to $2,422 per ounce. Investor focus will now shift to next week's US CPI data for further cues on Federal Reserve policy for the same. Let's shift our focus now. We look at a report on a jump expected in Wall Street bonuses. The incentive payouts to top executives on Wall Street are set to skyrocket across the board following 2 lackluster years. Debt underwriting is predicted to gain the most. Take a look at our next report for more on this.
Investors that had previously slowed asset purchases in response to the Federal Reserve's rate hikes are now making a triumphant return. A report by compensation consultant Johnson Associates predicts a rise in bonus payouts for executives across sectors this year. The projections are based on rising global stock prices, which have boosted demand on trading desks across the world. A jump in asset prices led to solid second quarter performances from US and European banks. According to Johnson Associates, bankers who assist corporations in selling debt might be the biggest winners in bonus payouts this year. These debt underwriting professionals can get bonus payments of up to 35%. The jump in predictions come as deals gather steam and capital markets recover from multi-year lows. Underwriters that specialize in stocks are not far behind, with returns of up to 30% expected. Incentives for stock traders might increase by 15%, while those for fixed income dealers could see a more moderate increase of 5 to 10%. Bonuses in the wealth management and asset management industry can see a spike of up to 10% due to high demand. Incentive pay at hedge funds can rise by as much as 15%. However, uncertainty surrounding the U.S. economy, the approaching U.S. election, and the uncertainty in the Fed's rate path trajectory might cause predictions to shift through the year. The bonuses in the financial business last increased when the pandemic sparked a surge of trading and deal-making. However, that only worked for a short while, and compensation was reduced after. From its recent lows, traditional merger and acquisition activity has begun to rise, albeit slowly. The expected bonus payouts will bring the growing disparity in global incomes into context once again. The payouts to top executives on Wall Street have been a long-standing debate, with the latest projections showing a jump despite U.S. households struggling to make ends meet bring big bonus payouts back into the focus. Business Bureau Report, WION World is One.